24 hours before the greatest trader in modern history put a bullet through his head, a photographer asked to take his picture, to which he replied, "It's the last picture you'll take because tomorrow I'm going away for a long, long time." But why would an influential billionaire, a man who traffic light operators would switch the lights to green for, a man capable of single-handedly controlling the American economy, kill himself? This is the story of Jesse Livermore, a tale of triumph and tragedy, a warning about the perils of chasing wealth at any cost, and a guide to making billions out of thin air. Jesse Livermore's story begins on a small farm in Shrewsbury, Massachusetts. He grew up in a family that knew the meaning of hard work, but always seemed to come up short on cash. While Jesse's father did the best to keep food on the table, there came a day when even that wasn't enough. Eventually, he was forced to make the difficult decision to sell the farm, as the weight of their financial troubles became too much to bear. In the face of his setback, the Livermores found support in the loving embrace of Jesse's grandparents. Their home became a sanctuary for the family, providing a stable environment while Jesse's father worked tirelessly to save enough money for a fresh start. Their new beginning? Yet another small farm, but this time in Acton, Massachusetts, roughly 30 miles away from Jesse's birthplace. Although Jesse was a poor farm boy by circumstance, there were early signs that he was destined for greatness. By the age of 3, Jesse had already mastered the basics of reading and writing. As he grew older and began his formal education, Jesse became an exemplary student who managed to pull off 3 years of work in just one. But if you think this is your typical story about a bright-eyed, bushy-tailed schoolboy studying his way up to the top, guess again. When Jesse was just 14 years old, his dad pulled him out of academia to help on the farm full-time. It seemed to Jesse that his shot of escaping the banalities of rural life were forever out of reach. However, Jesse's mother saw that her son was destined for more than just raising livestock and growing crops. She encouraged Jesse to run away from home, giving him $5 to start a new life, less than $200 by today's metrics. And so, acting on a leap of faith, Jesse Livermore took himself to the bustling city of Boston, a culture shock compared to the farm life he'd known before. While most small-town teens would blanch at the thought of having to make it on their own in a strange city, Jesse was not your typical teen. He had something to prove, and a debt to repay to his mother. Naturally, Jesse's first order of business was to look for a job, and in the 1800s, it wasn't as easy as logging into Indeed and uploading your resume. He scoured the city for opportunities, striking out until he came across a small stockbroker's firm called Payne Weber. One of the chalkboard boys had called out sick that day, and the higher-ups just so happened to be looking for someone to fill in. Had Jesse Livermore shown up in Boston a day later, perhaps he would never have become one of the richest men in America. Had Jesse Livermore shown up in Boston a day later, perhaps that life-ending bullet may never have been fired. But Jesse showed up that day, and he quickly found himself employed and head over heels in love with that cutthroat world of trading. But let's not get ahead of ourselves. Jesse, entirely new to the finance business, first started out as a lowly chalkboard boy, copying down share prices from ticker tape recordings. The ever-changing digits fascinated him, and Jesse quickly developed a unique perspective on stock prices, seeing them as far more than just dollar values per share. He kept a small notebook where he could record his own predictions about the stock market, and then he'd compare his notes to how the numbers actually moved. It was here that Jesse learned that nothing is ever new in Wall Street. Anything that happens in the stock market has happened before, and you can bet that it'll happen again. Based on this observation, Jesse realized the reason the majority of stock traders don't make profits. They act randomly instead of looking for patterns. Of course, Jesse had no real way of putting his newfound knowledge to use. That is, until an older office boy introduced him to the world of bucket shops. Now you might be wondering, what is a bucket shop, and what role do they play in Livermore's story? Bucket shops allowed everyday people to gamble on stock prices without making any real trades. In a bucket shop, you'd bet against the house. Who would more often than not profit from customers' losses? These sleazy gambling shops encouraged their customers to use high leverage, which meant bigger bets, bigger losses, and in Jesse Livermore's case, bigger wins. His first bucket shop bet? The Burlington Railroad. The same office boy who'd introduced him to these now illegal trading shops had also coughed up a hot tip. The Burlington stocks were on the rise, and now was the perfect time to buy in. Jesse, who would later warn against accepting stock market tips from friends, cracked open his notebook to check out his own observations on the matter. He immediately saw a promising pattern and invested all the money he had, which was just a measly few dollars, into Burlington shares. Talk about a risky move. Luckily, the move resulted in dollar signs for Livermore. He began using his insightful stock predictions to rack up insane profits, even earning himself the nickname the Boy Plunger due to his bold trades. At just 16 years old, it's rumored that Jesse made over $250,000 by today's metrics, just from gambling on market movements in bucket shops. At first, Jesse's family disapproved on how he was making his money, but it was hard to turn down the perks that came along with it. Just a year after leaving the farm, Jesse returned home to repay his mother's debt, except he'd increased her initial investment by nearly 20,000%. That's right. What started as a $5 gift had become a $1,000 repayment, all thanks to Jesse's astute stock price analysis and what would become a lifelong belief in the importance of paying back his debts. Yet, Livermore's bucket shop saga was not one that would last forever. It wasn't long before every shop in Boston was banning the notorious Boy Plunger. The more he made, the more they lost, and they were fed up with getting swindled by a teenager who hadn't even finished high school. While Jesse tried several workarounds, including making up fake names, wearing disguises, and even intentionally losing, the powers that be weren't fooled. So, out of necessity, Jesse started traveling to other bucket shops, moving on only when they'd catch wise and give him the boot. It wasn't long before there were virtually no bucket shops in that area that would take his business. That is, except for one. The largest and richest bucket shop in New England, the Cosmopolitan Stock Brokerage Company. Unlike the smaller firms, the Cosmopolitan didn't reject Livermore outright, but they did make him jump through crazy hoops, like forcing him to trade at a 3-point margin with a continually rising premium. But even with these challenging conditions, Livermore prevailed, managing to churn out profits left and right. Yet one day, he felt a nagging feeling growing in his gut. His instincts were screaming at him to close his short position of sugar stock, despite having no good reason to do so. So Livermore, a trader who'd always based his moves on patterns, did something highly out of character. He closed out his position based on nothing more than intuition. It wasn't long after that sugar stock prices started surging, proving Livermore's instincts had been correct. He suspected that Cosmopolitan had illegally manipulated the stock price of this commodity to screw over Jesse. Now 21 years old, Livermore decided that his impish days of bucket shop betting in Boston had come to an end. So, with $2,500 to his name and a desire to be the greatest stock trader in the world, Jesse Livermore moved to New York City to try his hand at the real thing, the New York Stock Exchange. Frank Sinatra once sang about New York City, "If you can make it here, you'll make it anywhere." But Livermore was having a hard time making it in a city that never sleeps. The strategy that had worked in bucket shops wasn't cutting it in New York, and Livermore was struggling to adapt to his new environment. But why was trading on the stock exchange so much harder than betting in bucket shops? In the lawless land of bucket shops, which were essentially unregulated gambling dens, Livermore had used extremely high leverage while trading with minimal capital. On the New York Stock Exchange, his aggressive tactics and supersized positions were kept in check by rules and regulations. But it wasn't all doom and gloom. It was during this time that Livermore also met his first wife, Nettie Jordan, from Indianapolis. The two only knew each other for a few weeks before they decided to tie the knot. In hindsight, probably a red flag. But Livermore was a man in love, and he showered his new wife with expensive gifts using the money he'd made throughout his teens. To no one's surprise, this wouldn't end well. Livermore made a series of bad trades, and within just 6 months of moving to New York City, he'd lost all his money. With no more cash left to trade, Livermore had to start, once again, from nothing. After explaining the situation to his wife, he asked her if she'd pawn off some of the jewelry he'd given her so that he could use it to trade. Nettie was immediately understanding and gave Livermore a great big hug. "Just kidding!" She kept the jewelry and ditched Livermore, leaving him not just penniless, but also entirely alone. So, with nothing to his name, no romantic prospects, Livermore borrowed $1,000 from a broker to whom he was already in debt and decided to give bucket shops one more go. The shops in New York were out of the question, as Livermore didn't think they were trustworthy. Instead, he traveled to St. Louis only to be banned from every shop in the city within 4 days. Now that has to be some kind of record. Luckily, his subsequent trip to Hoboken bore more fruit, and Livermore was able to turn his initial $1,000 into a $10,000 windfall. He then returned to New York City, ready to learn from his mistakes and find a strategy that would work in the markets. He delved deep into studying trade reports, railroad earnings, and financial statistics, seeking to make more informed decisions rather than relying on instinct. However, despite often correctly predicting the general market trend, Livermore realized his profits were not as impressive as they should be. Why not? Because his conservative strategy of taking small gains in a bull market was limiting his ultimate potential. Livermore also came to understand the crucial difference between gambling and speculating. He concluded that the most important role in trading was not to be a sucker, to avoid falling for common market pitfalls, and to have the conviction to follow through on one's analysis. Once he learned these valuable lessons, Livermore finally started to see some successful trading with the New York Stock Exchange. But in 1906, Livermore decided to take a break from the intense world of trading to go on a fishing vacation in Atlantic City. Yet, even there, he couldn't resist the pull of the market. While strolling the boardwalk, Livermore noticed a branch office of his brokers, Harding Brothers. As if magnetically drawn, he found himself studying the quotation board, focusing on the price of the Union Pacific Railroad stock. Without any clear reason or insider information, Livermore felt an overwhelming urge to sell his current Union Pacific shares. Of course, this move would go against everything he'd just learned about only making informed decisions. And despite his friend, who was bullish on the stock, telling Livermore he was crazy, Livermore followed his instincts and sold 3,000 shares. He couldn't explain his decision logically, only that he had an unshakable feeling and it was the right move. Even as Union Pacific stocks continued to rise, Livermore doubled down and sold more shares. Then, in a stroke of incredible timing, the San Francisco earthquake of 1906 struck, sending shockwaves through the economy and, most importantly, tanking Union Pacific stocks. Needless to say, Livermore's instinctive sell-off had proved remarkably and inexplicably prescient. In the span of a few days, he pocketed his biggest earnings to date, a staggering $250,000. This windfall dramatically increased Livermore's capacity to trade even larger blocks of stock. So, how can we replicate a trade like this one using our gut instincts to make a small fortune? Well, the answer is we can't. Just like Livermore didn't actually predict the earthquake of 1906, we can't predict exactly how the market is going to move. And while Livermore's Union Pacific stock story is an interesting one, it's proof that some of the best moves in trading are just based on dumb luck. Fresh off his stunning success, Livermore soon found himself in Saratoga Springs, a popular summer resort town known for its horse racing and high-stakes gambling. While there, Livermore's keen eye noticed something new about Union Pacific. There was a sudden surge in its trading volume, indicating possible market manipulation and insider trading. Trusting his instincts, Livermore started buying the stock back again, sensing an opportunity. However, his friend Ed Harding cautioned him against this move. Harding suspected that insiders were deliberately feeding Livermore the stock, planning to pull the rug out from under him later on. Despite his own gut feeling, Livermore listened to Ed and sold all of his Union Pacific holdings. The very next day, Union Pacific made a stunning announcement, a 10% dividend on the stock. The news sent the market into a frenzy, with Union Pacific's price soaring. Livermore immediately realized his error. He had let outside influence cloud his judgment and override his own market instincts. Acting swiftly, he bought back the stock, covering his losses, and even managed to eke out a small profit. But more valuable than any monetary gain was the lesson Livermore learned from his experience. He learned that tips and advice from others, no matter how well-intentioned, could lead him astray. The market was a complex beast, and only by reading its movements and following his own convictions could he hope to tame it. And in 1907, Jesse did more than just tame the beast. He turned it into his lap pet. As gold flowed out of the United States and the banking systems weakened, brokerage firms were collapsing like dominoes. Money, if available at all, came with staggering interest rates of 100 to 150%. Amidst this financial meltdown, now known as the Panic of 1907, Livermore saw opportunity. He was shorting stocks with a vengeance, adhering to his tried and true systems of selling more and more stocks short as the market plummeted. As the panic reached a crescendo, Livermore experienced his most triumph trading day to date. In a single trading session, he pocketed a cool $1 million, equivalent to around $33 million in today's money. Word of Livermore's success quickly reached the highest echelons of power. One day, J.P. Morgan himself, the legendary financier, dispatched a messenger to Livermore's office with an urgent request: stop selling stock for the sake of the markets and the nation. It was a tough choice. If Livermore were to continue shorting the market, he could indeed reap immense personal wealth, but at what cost? The economy, already on the brink, could be pushed into a full-fledged depression with far-reaching consequences for millions of Americans. In a decisive moment, Livermore made his choice. Rather than double down on his short positions, he began to buy. He poured his resources into the market, providing a much-needed influx of capital and confidence. As other investors saw Livermore buying, they too began to follow suit. Slowly but surely, the tide began to turn. The market, which had seemed on a forever downward trajectory, started to stabilize and then tentatively to climb. In that instant, Livermore had not only secured his own fortune, but had also played a pivotal role in staving off a complete economic collapse. This was the day that Jesse Livermore truly became Jesse Livermore. But the story has only just begun. In 1908, Jesse decided to turn his attention to the commodities market, particularly cotton. As he immersed himself in the data, Livermore noticed a peculiar trend. Everyone was rushing to sell their July cotton, and to the untrained eye, it appeared to be a surefire path to profits. But Livermore, with his keen instincts and contrarian streak, saw opportunity. Rather than following the herd, he made a bold decision. He would buy July cotton instead. Slowly, Livermore began to accumulate his position. He started with 50,000 bales at 12 cents apiece, but soon increased his holdings to 140,000 bales. Soon, the price of cotton had increased to a whopping $1.25 apiece, yet his triumphs were not without controversy. A leaked story about Livermore and the cotton market made its way into the press, which many believed was an intentional move by Livermore to manipulate the market. Despite Livermore denying any responsibility for the leak, many of the financial world believed that he'd engineered the entire event. We can never know for sure whether or not Livermore actually leaked the story, but we do know that he made substantial gains from his foray into commodities. Yet fate took a turn when Livermore acted on a bad tip from Percy Thomas, the so-called Cotton King, to buy even more, a decision that would have disastrous consequences. And when the price of cotton eventually plummeted, Livermore saw 90% of his fortune evaporate, forcing him to declare bankruptcy and sell off most of his belongings. It took Livermore a full year to pay off his debt and rebuild his fortune. And the moment he did, he had love on the brain. At the age of 40, Livermore found himself drawn to the charms of Dorothy, a 22-year-old beauty of the famed Ziegfeld Follies, an ensemble of dazzling Broadway beauties. The two were a study in contrasts, the seasoned financier and the young starlet, but their connection was undeniable, and they eventually had 2 sons together. Flushed with success and determined to give his family the very best, Livermore set his sights on a magnificent property in Great Neck. It was a grand house, befitting of the world's greatest trader, his loving wife, and their 2 small children. He even handed Dorothy an empty check, entrusting her with the task of entirely furnishing their new home. And as Livermore's stardom continued to rise, so did his influence. Newspapers hung on his every word, and investors across the nation began to buy and sell based on his recommendations. A single mention of Jesse Livermore could move markets, sending stocks soaring or plummeting with the force of a tidal wave. It was a heady time, a period when Livermore's power and prestige seemed almost without limit. Fast forward to 1929, and things only got better as Livermore found himself riding the crest of a raging bull market. He leveraged his profits to borrow heavily, increasing what were already substantial bets. Yet by summer, Livermore's instincts told him that the party was nearing its end. With characteristic foresight, he quietly liquidated his positions and compiled a list of stocks he believed were overextended. Initially, Livermore's timing seemed off. He established a handful of small short positions, but the market continued its ascent, making him appear mistaken. However, as late summer melted into early fall, his bet began to pay off tenfold. Operating in the shadows, Livermore amassed an enormous short position, spreading his trades across hundreds of brokers to avoid detection. He understood that if his plan were to leak, it could upset the delicate balance he had so painstakingly cultivated. Then, on Black Tuesday, October 29, 1929, the hammer fell. As the market plunged into an unprecedented crash, Livermore's secret short position paid off. In a single historic trading session, he netted an astonishing $100 million, a sum that would equate to $1.8 billion today. Eager to share the news, Livermore returned to his Long Island estate, but as he crossed the threshold, he was greeted by an eerie silence. The once vibrant home was now deserted. The paintings were stripped from the walls, and the safe was completely empty. Panic rising, Livermore frantically searched the house until he discovered his terrified family huddled in the servants' quarters. In their fear, they had assumed the worst, that the market crash had rendered them penniless and destitute. But Livermore explained the incredible truth. Far from being poor, they now possessed wealth beyond their wildest dreams. The crash that had ruined so many had only catapulted the Livermore family to the pinnacle of prosperity. So at this point, you're probably wondering, how did it all come crashing down? Before we get into how Jesse Livermore blew his wealth and tarnished his legacy, let's talk more about what his lifestyle was like. At the height of his success, Jesse Livermore lived a life of unparalleled luxury. One of his most prized possessions was a magnificent $200,000 yacht, a floating palace from which he would embark on deep-sea fishing expeditions, attended by a dedicated 14-member crew. Such was his power and prestige that even traffic light operators would switch the lights to green as he drove by. Meanwhile, Livermore's wife was renowned for the lavish parties she would throw, glittering affairs filled with elite of society. Of course, Livermore, who always put trading first, preferred these soirees to take place when the markets were closed. The couple's home was a showcase of opulence, filled with expensive antiques and a gleaming Rolls-Royce in the driveway. Yet, there was a dark side to Jesse's influence. Newspapers were filled with stories of scandals and his love for women, driving Dorothy to develop a dependency on alcohol. She began making strange purchases that put a strain on their fortune. One of her most bizarre decisions was to hire a fully French staff so their children could learn the language. She spared no expense in recruiting native French speakers as chefs, maids, and nannies. However, the language barrier proved to be a significant problem. Livermore and his wife struggled to communicate even the simplest instructions to their new employees, and Dorothy eventually had to fire the entire French staff. The constant overspending and erratic behavior took a heavy toll on Livermore's mental well-being, plunging him into a deep depression and driving Dorothy to hit the bottle even harder. And in 1914, Livermore found himself a staggering $1 million in debt to his brokers. But how did he get there? Well, first off, Livermore was trading in what he called a flat market, a market with little opportunity for making money. Second of all, he was repeatedly violating his own trading rules. While going rogue had worked for Livermore in his early days, his luck had since run out. He was taking bad advice from pals, doubling down on losing bets, and bailing on promising investments in both cotton and wheat. Combine this with his love for overspending, and it's no surprise that Livermore had once again lost his fortune. However, even in the darkest hour, his innate sense of honor shone through. Livermore made a promise to his creditors that he would repay them in full when his fortunes allowed. So, after the markets reopened and the bankruptcy court cleared his debts, Livermore threw himself back into trading with renewed vigor. Determined never to face such hardship again, he took the prudent step of securing $500,000 in a trust fund, ensuring that he would always have a financial safety net. But just when it seemed Livermore had found stability once more, fate dealt him a series of cruel blows. In 1925, money-hungry criminals attempted to abduct his children for ransom. 2 years later, a terrifying home invasion further shattered any sense of security. These traumatic events plunged Livermore into yet another deep depression, and the relentless vilification he faced in the press didn't help. His wife, struggling to cope with the aftermath of the invasion, sought further solace in alcohol, her drinking habit spiraling out of control. Meanwhile, the children found themselves floundering in school, their education taking a back seat to the chaos at home. The strain on Livermore's marriage eventually proved too much to bear, and in 1932, the couple divorced, with Dorothy swiftly remarrying. Livermore, too, sought a fresh start, marrying a new wife whose tragic past seems to foreshadow his own fate. All of her previous husbands had taken their own lives. Yikes! And, as if this wasn't enough, Livermore's professional world was only further thrown into disarray. On May 30th, 1933, the Securities of Exchange Act came into effect, outlawing many of the tricks that had been instrumental in building his fortune. One such trick was called painting the tape. This involved Livermore placing trades in bucket shops, then trading the real shares on stock exchange to move the price in any direction he wanted. With maneuvers like this outlawed, Livermore found his toolbox suddenly empty and his ability to rebuild his wealth greatly diminished. In 1934, Livermore, once a financial god, was forced to declare bankruptcy for the third time. This time, however, he had no tricks up his sleeve to pay back his debts. For a man who had prided himself on always honoring his debts, this was a devastating blow to his ego. Lawsuits piled up, including one from a mistress putting strain on what was already a less than perfect marriage. And Livermore soon found himself suspended from the Chicago Board of Trades, his reputation in tatters. Despite his best efforts, Livermore never managed to rebuild his fortunes. In 1940, he published a book titled How to Trade in Stocks, but it barely sold, only adding to his sense of defeat. On November 27, 1940, a photographer asked to take Livermore's picture. He replied, "It's the last photo you'll take of me. Tomorrow, I'm going away for a long, long time." The next day, after stopping for a cocktail, Jesse Livermore walked into a cloakroom and ended his life with a single gunshot. He was only 63 years old. So what to make of this story filled with both success and failure, with the highest of highs and the lowest of lows? Well, first off, as we reflect on the extraordinary life of Jesse Livermore, it's clear that his trading methods, while brilliantly effective in his time, are now largely illegal. We cannot replicate his exact strategies in today's market. However, there are still valuable lessons we can learn from the triumphs and tragedies of the boy plunger. One of the most important takeaways is the significance of trusting your own instincts rather than relying on tips from others. Livermore's success was built on his ability to analyze patterns and make bold, independent decisions based on his own convictions. In a world where information is constantly swirling, it's crucial to develop a keen sense of judgment to have the courage to act upon it. Another lesson we can glean from Livermore's life is the importance of discipline, both in the markets and in our personal lives. His story serves as a cautionary tale about the dangers of excess, impulsivity, and the toll that unchecked ambition can take on one's mental health. Yet, despite his tragic end, Jesse Livermore's story is a testament to the resilient human spirit and the endless potential of those who dare to dream big. But if you think Livermore's story is insane, you won't want to miss out on our next video, a gripping tale of another financial mastermind whose life was just as, if not more, surreal and unpredictable.